When I first started trading, I was completely overwhelmed with price action strategies. Strategies like ICT, SMC, and supply and demand. I tried them all. And after spending thousands of dollars to try and actually master these various strategies, I still wasn't making money. But then in September of 2023, I discovered one confirmation signal that completely transformed my trading. I call it the power signal. And by adding this simple framework to my trades, I managed to push my win rate up to 70+%. And as you can imagine, this made my trading much more consistent. And in fact, like just last week, I managed to get this trade over here on the Nasdaq and this trade over here also on the Nasdaq, which allowed me to receive this payout for $8,567. So in this video, I'm going to show you exactly what the power signal is and how you can add it to any strategy to dramatically increase your win rate. So every morning, 10 minutes before the New York market open, I'm looking for the power signal. And the power signal is essentially the 5-minute market structure that we use in a unique way to determine if you're about to hop into an 80% win rate trade or not. Now, please remember that we do not try to predict the next market move. We simply use this power signal to get the market to reveal its hand and then act accordingly. And how do we even do this? Here is my exact formula. The first thing we're looking at is 5-minute V-shaped reactions. I classify a V-shaped reaction as a piece of price where the market pushed aggressively in one particular direction and then we had it move in the complete opposite direction out of that zone. We then would mark out the top of these V-shaped crests as highs and then find the lowest point that the market had been between those two highs and mark that as a recent low. The next thing that we're going to look at is how these areas have been broken and how many times price has broken in one direction. What we're looking for here is 2 or more breaks in one direction. If price breaks to the upside twice, I'm then going to consider that as a bullish market. If price then breaks to the downside twice, I would then consider this as a bearish trend. Let's have a look at how the bias can then also change direction. If price breaks structure twice to the upside, it is bullish. But in order for it to flip bearish, we must have 2 breaks to the downside after that. If price breaks to the upside twice, then breaks the lows only once, we are still bullish, and I class this as a type of liquidity sweep, which can then still push price higher. So don't get fooled by this. This can, however, change into a bearish trend if we then break structure once again to the downside with a total of 2 breaks to the downside. This then confirms the bearish trend, and we've now changed from a bullish to a bearish trend. Let's have a look at some real-time chart examples of this. We are just before New York open. We're now going to identify the V-shaped recoveries and mark them out. So as we can see, up till here, we were pushing upwards. How do we know that? Well, we're breaking structure to the upside continually, right? So this was our swing here. We had a swing here and we had a swing here. Each one was broken, okay? So we're continually breaking to the upside. The most recent ones were these two here. And if we look at the lowest point between these two areas, it would be down here. So let's mark that on real quick. And as we can see, price broke straight through it, which again doesn't yet confirm that we are now bearish. We want to see price pull back and then break again, which it does right here. Okay, so we can mark that on as well. So we've now had 1, 2 breaks to the downside. Okay, so we can now confirm that it's bearish just before the New York Stock Exchange open, which gives us a huge advantage. And like I say, it makes the probability of us taking sell trades right now a lot higher, because we can see that essentially the flow of the market is bearish. So let's have a look and see what ended up happening here. you can see that the market pushes bearish. It pushes bearish significantly, right? And you can imagine taking trades in line with this, whether you're taking trades on the 1 minute, whether you're taking trades on the 5 minute, you're gonna be having more wins trading in line with this as price is bearish. Let's have a look at another example real quick. Okay, so let's analyze this particular example. We can see it was pushing bullish, obviously, right here, pushing bullish. We then had this low come in right here. Let's mark it up. Why is this the low? Because we had a break of structure right here. We had a break of structure right here. This is the high. This is the previous high. And if we look between those two areas, this is the lowest point. Okay. We then had price take that out, retrace, and then take out that previous low once again. This would have been the low. Because we pushed lower, took that out, retraced, and then took it out once again. We then retraced, took it out once again. And then what do we see happens? Price retraces. And what are we expecting? We're expecting price to take this out once again, okay? So we have price come up. What does it do? Like what we were talking earlier, it takes out the previous high as a sweep and then starts pushing lower. And you can see right here, it opens low, okay? So having this structure allows you to be able to organize the flow of the market and be able to read it, okay? So once again, we flipped bearish, we then retraced again, and what did we expect? Price to then push lower. Let's have a look at one more example here. So if we have a look at price right now, we can see that it's clearly creating higher highs and higher lows. How are we gonna mark that out? Well, you can see here that price took out the highs here. This would be the highest point. We then retraced and we're now waiting for price to then break that. It breaks it right here, okay? It breaks it. We're waiting for a pullback. Price pulls back. This is the highest point now. And then we can mark that on as a break right here. We're then waiting for a pullback. Price pulls back here and then pushes up once again. We have price break. So we've now had 1, 2, 3 breaks, okay? We've now pulled back and the market is about to open now. So what we're really expecting is for price to come and look for this up here. And there you go. We also simultaneously on the open, what happens? We have this significant zone, we break it, we come back, retest it, which is in line with our breakout strategy, and then we push up. If you want to learn that full breakout strategy, you can access the free course in our Discord community. That's also free to join, which is available in the description below. You can also live stream with us there daily, completely for free, where we give our full game plan every day before New York market open. So you can see clearly that we're bullish here and where we're about to go next, where price is looking to hunt next. And that's the most important thing. However, there's a couple other things that I also look at when it comes to this particular strategy, and I can show you exactly what that is. Now, the other thing I like to look at is the 50 simple moving average. You're going to want to add it to your chart simply by searching SMA. You're then going to add the moving average simple here to your chart. Click on it. It'll then appear at the top here. You're then going to click on this little gear icon and you're going to change the length up here to 50. Okay. Once you've done that, you will have this on your chart. Now, this helps me determine the trend of the market as well as using this power signal. So what we do is we look back, we look for Asia session, which is roughly over here, okay? And what we're wanting to do is see how the SMA has trended since then. So as you can see right here, it's been trending up since then. So I think we're quite safe to say that the SMA is pointing bullish. Now, within the breakout strategy that we trade, we only take buy trades when we are above the SMA, and we take sell trades when we are below. Okay, it's very important that we take note of this, because if the SMA is moving sideways, that means that we are in indecision. We do not want to be trading when the SMA is moving sideways. But when the SMA is trending from Asia session like this, it means that the market's a lot more predictable. There's a clear trend. So just taking note of the SMA and taking note of structure is a tool that you can use to create this power signal that can take the win rate of your strategy and push it through the roof. Not only that, it gives you a tool to read the market with, a language that you can use to decipher what's about to happen next, so that you can react accordingly and so that you are able to trade in line with the trend. So thank you everybody for watching. I'll see you guys in the next video. Make sure to click the link down below to join our free Discord, access the free course that you can use to learn the exact strategy that I trade in detail, and join me on the live streams that happen every single day before New York market open. Cheers everyone. Bye-bye.